Hi guys, welcome to the next section of the Scalp University. In this section, we'll be going over step by step on how I break down my top-down analysis. And we're pretty much going to be getting into the strategy from here on out. I am starting on the higher time frame, so I'm on the 1 hour right now. As you all know, I normally don't go higher than the 4 hour. The only time that I will quickly glance at the daily time frame, maybe the weekly, is if price had a massive push to the upside or a massive push to the downside, and there's not much price action to go based off of on the 1 hour or the 4 hour time frame. That's the only time that I'll go ahead and look at the higher time frames to kind of see what was going on, because normally in that case where we do have a massive push to the upside or downside, that could have been, caused by a news event or, something happened in the market which caused volatility. So those are the only, reasons why I would start at a higher time frame. And, I know what you're thinking. You're probably thinking, do you really need to be looking at the 1 hour or the 4 hour time frame if we're just scalping and we're, going for essentially not that many pips, right? And yes, it it would be odd to think that way. However, my trading has truly changed once I started incorporating the higher time frames. And I think I've said this in my Telegram chat before, that precise entries actually stem from the higher time frames. So don't get that confused. Yes, we are scalping. I am a scalper, and this is a scalping strategy. However, we have to keep in mind of the higher time frame, okay? The higher time frame rules. It's always going to rule. It's always the strongest. It's what we need to base our analysis off of. And the reason why I start off with higher time frames, such as the 1 hour and 4 hour, although we are scaling down to the 1 minute to find our entries, that is how I'm able to get a more precise entry on the 1 minute, is the fact that we are creating a narrative based off of the higher time frame. That is what's most important. You want to be able to create that narrative from the higher time frame, and as we're dropping down, then it'll be easier for you to put together your confirmations. It'll make more sense stemming from a higher time frame. So it'll just make your trading a lot more easier on you. You don't have to work yourself up on just staying on the smaller time frames, trying to guess the directional bias, because you could do that. You could start off on the smaller time frame, and I'm not going to lie, there is times where maybe I'll just glance at the 15-minute, and if I see something that I like, then I'll go ahead and take that. But for now, I want you guys to just start off on the higher time frames and work your way down. As soon as you begin to understand the strategy a little bit more and you're more self-aware on the charts, then you're able to start on smaller time frames and be able to tell directional biases just from those smaller time frames alone. But for now, it's a lot more beneficial to start on the higher time frames. So let's get into the charts here. So we have GBP USD. I'm just going to be sticking with GBP USD as we go through our examples and how we go through the strategy. I do trade US 30 and just recently added gold. So if you trade or prefer any of those other pairs, you are able to test the strategy out on those pairs as well. They work well. But for now, let's just stick with GBP USD. So another thing too is if most of you follow me on Twitter, I did talk about, and I did mention on Twitter that I'm not really a fan of back testing. I know that this is a controversial thing. I have back tested before. I was actually a fan of back testing up until like the last year. And I do believe back testing is still really beneficial and great for those still trying to put together a system in place, or maybe still trying to sharpen their strategy and or refine their strategy, whatever the case is, I think it's still great to back test. However, I prefer forward testing. I feel like if you continue to back test, I feel like it could hinder your growth in terms of kind of you feeling comfortable with back testing and not really forward testing. I feel like a lot of times people get very comfortable with even being on a demo account that they're fearful of going live. And I feel like that eventually holds you back. Sometimes you need to jump head in first and really test your strategy live, because you want to test it live while you actually feeling the emotions at the time of trading. Like, you want to feel how you're feeling while you're executing live. What confirmations pop up for you? Like, what is your trade management while you're in a live trade? How are you thinking before you get into a trade, and your reactions within a trade? That's the only way that you're going to get better. That's the only way that you're going to build up that mental toughness and discipline, especially within your trading. Like, you want to embrace and feel these emotions. So I think it's important to kind of go head in first with everything. So of course, this is definitely going to be hindsight. Obviously, we're using, trading view. We're on this replay mode. It is going to be hindsight, but test it in live market over and over again, and you'll be able to see basically all the patterns and things like that. And again, one more thing I wanted to clear up from the liquidity models that was provided in the first section of the university is I want to just make it clear that those liquidity models, I am not really a pattern trader. So those models, they do happen. Okay. They do happen in the market. And I believe it's important to include those models because not everybody is like a price action trader, like specifically. I know that there are people that learn way more better and faster based off of models. So personally, I'm not really a pattern trader, or like I'm not really openly actively looking specifically for the model. I feel like if you're trying to look for something in the market, you almost never find it, right? It's always like that. You try so hard to spot something in the market, like a pattern, and majority of the time it's just not there. So that's why I wouldn't really consider myself as a pattern trader or like someone who trades models. But it's really funny because the trades that I do take, majority of my winners, you'll actually, if you compare them to the models, you'll find that they basically are some of the models played out. So just to make that clear, I don't specifically go out into the market like looking for that model and basically trying to mirror it. Based off of price action and structure alone is what helps me get my entries. But whatever works for you is what I want you to stick to. If it's easier for you to actually look for the model itself, then I would stick with that. But if you're more of a price action trader, just like me, and you just want to wait for reactions at certain areas, then I definitely encourage that as well. Either way, they both work. Okay, so we are on the 1 hour chart here. So like I said, I do start my analysis on the 1 hour chart. And if I do see a massive push to the upside, like I said, I'll go ahead and go to the 4 hour. But right now, everything's kind of looking okay. If we did go ahead and glance at the 4 hour, we can obviously see that we were bearish for a while. But here's what I want you guys to pay attention to as well. Okay. So we talked about liquidity, right? We talked about the fact that price would need to come back down and take liquidity out before we start seeing reaction. So immediately, if you've already studied how to read liquidity, we kind of already see what's happening here. Okay, right off the bat, I know exactly what's happening. So right here off the 4 hour, and this is another reason why it's so important to check the higher time frame sometimes, because we wouldn't have seen this on the 1 hour. Okay, so if we go back to the 1 hour and we're specifically looking at price here, just price alone, I mean, you could kind of see it, but you would see it a lot better and a better reasoning on why this is shifting in the market right now. It's a market structure shift. you could definitely see it a lot more in the 4 hours. So right here in the 1 hour, I mean, it's pretty easy to tell off the bat already. Like I said, the things that I do look for is price had, cleared liquidity right here. Okay. Price had cleared liquidity right here. Okay, that's crooked as fuck, but whatever. So we cleared liquidity right here. And then we went ahead and we also broke structure at this area as well over here. Okay. But the thing is, we broke structure on a lower time frame. Okay. So it's doesn't really look, I wouldn't consider this a break of structure on the 1 hour just because um it got broken by a wick to wick. And normally what I look for is price getting broken by the candlestick body. So I'll go ahead and drop down to lower time frame just to see if we do find a body breaking this. And that would confirm like we're pushing bullish. Okay. So if we did drop down to the 5 minute, I would still consider this a break. Um, I would still consider this a break. But I obviously, another reason too that you would know this would go bullish is because remember what we talked about as well in the beginning is the fact that we have this wick. Like, is the fact that we have this wick right here. I always talked about how we should pay attention to wicks and uh, pretty big sized wicks because eventually they will get filled anyway. So whenever you kind of see this right here, you can kind of already tell yourself or expect and assume that eventually price will take that wick out. Obviously, we don't know when it's going to get taken out, but eventually it will. Okay. And it's a good sign that we are on the 1 hour as well. We've already cleared liquidity and we push up. Now, there would be a better context for this, like I said, on the 4 hour, okay? Because this is just based off of hindsight on the 1 hour, right? So we're seeing what we kind of already see right now. But if I was to just start off on the 1 hour here, I would think, okay, so there was a break of structure here, but I wasn't, not too sure just because it didn't give me that full volume push to break this wick on the 1 hour. So it would kind of just leave me a little iffy, right? So I would kind of look at this and be like, okay, I'm not exactly sure if we are going to push bullish just because this candle that closed wasn't exactly strong enough for me to feel confident that the market will push, bullish, especially after the fact that it took this candle out here. We went ahead and pushed so hard bearish to the downside. So it's kind of like that would have me a little cautious, thinking that we're going to continue bullish. But when we go to the 4 hour, it makes a lot more sense. And this is, like I said, where you can put the context together. But when we look on the 4 hour and we zoom out, okay, so what do we see, right? So we see this built up liquidity right here. All of this is built up liquidity. And remember, I told you guys, entry will just be below liquidity and just above it, right? So my supply demand traders, my order block traders, whatever you use, okay? I'm gonna use this as a POI. I'm gonna say a POI, okay? I'm just gonna use as a POI, like I said in the beginning. But this would, I don't know about you guys, but this area would be my POI, my area of interest, okay? This entire area. You can use this entire area or you can kind of break it down and refine it to this right here. Okay, but this would be my entire area that I would be looking at for a possible potential reaction. And the reason why I would look at these areas for a potential reaction is mainly for the fact that it took out liquidity. That's all I needed to know. It took out liquidity and we are on a higher time frame. Okay, we're on the 4 hour. We're on the 4 hour. Okay. So I'm gonna change the color to this. Okay, no, that's too fucking light. Okay. Yeah, so we're on the 4 hour, and like I said, you get a bird's eye view, you zoom out, you can kind of see what's happening, right? You see that price had built up over here, came back down. Obviously, all this built up liquidity right here, and price is going to be just below that. So you could have gotten in, like I said, this is great strategy even for swing traders. So I mean, if you were a swing trader, you want to enter right here, you can, but we're not swing traders, okay? But just the fact that we already had identified this on the higher time frame, it's just gonna make our lower time frame entries more precise. Okay, so we have this going on the 4 hour. We marked it. Okay, and we already see. So if I already see a reaction happening on the higher time frame, it's safe to say, like when you see this happening on the higher time frame, like you might already think, oh, the move is, finished. I can't really get in anymore, right? Because price had already reacted to this area. Okay, price had already reacted to this area, and we see that it already pretty much broke structure here. Okay, I mean, and then this is where the story happened on the 1 hour, where price had broken structure here, but like I said, it wasn't enough confirmation for me to really get into a buy, just because that break was not really strong enough, because it took that previous candle out without a wick. It was a wick to wick break, meaning whenever it is a wick to wick quote unquote break, if it's a wick to wick type of break, I wouldn't really consider it a break. If it's a wick to wick, it would more likely be considered taking out liquidity. Okay, so that's the difference here. So whenever we see this happening, this usually just means price is taking out liquidity. Okay, but if we see an actual candlestick body breaking the previous high or filling in its wick, that's what I would consider a break of structure, right? You want to see volume when we're breaking structure. But like I said, just off of this structure alone, I like the way that price reacted here, and this was expected, right? We want to see reactions in this area in the higher time frame. So now that we got this reaction here, let's drop back down to the 1 hour. Okay, so now that we got this reaction here, and I was a bit iffy on this position here, because I was iffy, and because we went back to the 4 hour, I can now be a little bit more confident in this analysis that we are going to push bullish, because it doesn't really matter what the 1 hour is telling me right here, because the 4 hour is stronger than the 1 hour. So you always have to remember that if you're kind of in between two different time frames and you're not exactly sure which one to choose the one that looks the most clear to you. Okay, and the one that looks most clear and makes most sense to us right now is definitely the 4 hour, because alone, the fact that we cleared out liquidity, and that's what we're looking for. Whenever we clear liquidity and price reacts to that, it's going to have a reaction. Okay, and remember, we we're also talking about, if you to understand and figure out how you got the right reaction, price will just fly. Okay, and what did price do? We reacted and price just flew, right? We broke structure here, price just flew. I wish it was a stronger break of structure, but price did fly. Okay, and that's indication for us that, okay, price flew here. So it was a great reaction. I mean, on the 4 hour here, price flew. It flew about 80 pips. Okay, that's already a good move. And like I probably would have caught this move on the lower time frame. So I'm gonna go back here, because I do want to mention one thing, because I just don't want, I hope I'm being very clear. I'm trying to be as clear as I can with you guys right now, so that you're able to understand this, especially if it's new to you or you've never really looked at the market this way. But I'm trying my best to explain it. So if you guys still have any questions, you can ask me, okay? Don't feel afraid to ask. Always ask questions, but um this is what I always look for. Okay, so this is pretty much my bread and butter on the higher time frames. This is always what I want to see. Okay, I always want to see a higher time frame POI get tapped, because majority of the time when I see this on a higher time frame, even on a lower time frame scale, okay, but the higher time frames give me more confidence in a preciser entry on the lower time frame. So when I see this on a higher time frame, immediately I already know that when we see price tap here, immediately Like when I see price dropping down to like a 4 hour POI or even a 1 hour, right? It doesn't need to be a 4 hour, but 4 hours would be stronger. It doesn't really matter. But what I really truly want to see is when price hits that POI that I've marked or I have an interest with, when price just sweeps liquidity and it taps into something below that, drop like once you see that on the higher time frame, go to the lower time frame. I'm telling you, you can back test it, you can forward test it, and you can watch it in the live market. Go to the 1 minute, go to the 5 minute. If you see a break of structure on the 1 minute and 5 minute, take an entry right after at the retest. That's all you need. This is literally all you need. Like on the higher time frame, even if this was a fake reaction, and when I say fake reaction, I'm meaning that even if this was a failed swing move, so for example, if this was failed, obviously this low, if this low didn't break a high, that's okay. Because even if it didn't break a high, that means it's a failed swing low, meaning that we will, continue to break structure and see lower prices. So even if this swing low was a failed swing low on the higher time frame, it doesn't matter because when you see price approaching a higher time frame POI and you drop down to the 1 minute or the 5 minute and you see a break of structure, I would take it. The most you're going to get would probably be a good 10 to maybe 30 pip reaction. Okay. And that's the great thing about scalping in this strategy is because once you see liquidity being taken out and you get a quick reaction, because like I said, you're always going to get quick reactions at POIs. Okay. So keep that in mind. Once it hits a POI, especially a higher time frame POI, it's going to have a reaction, whether or not it's a failed swing or a strong swing low. Okay. It doesn't matter whether it's a failed string or a failed swing or a strong swing, you're going to get a reaction no matter what. You're going to get a reaction either way. And it's so crazy because, and then this is why I love scalping, because the fact of the matter is you can get the entire bias wrong. Okay. You can get the entire bias wrong on the higher time frame, but you can still be profitable. Like, look at this. Like I said, if this was a failed swing low, price did not break a higher time frame high, and it ended up okay, where it ended up right here. Say like it did not take this high out and it ended up right here. That means this low had failed, right? And we started pushing with heavy volume. It's going to continue to break this low. But if you had saw this happening previously and you decided to drop down to the lower time frames and you saw that break of structure, you saw the same thing that we're seeing on a higher time frame. You drop to the 1 minute, 5 minute, you see a break of structure, you see a clear liquidity, and you see a POI, and bam, you enter. Take that up until the equilibrium of the trading range on the lower time frame, and then all you have to do is just TP there. You TP shorter, or you TP halfway of that trading range, or it doesn't need to be a trading range. It can be an area that makes sense to you. It can be a break and retest area. Okay, it can be any area that you want, another POI that you're looking for. You can TP at that area. And once you hit TP and price reverses, it doesn't matter because you've already got your move. And that's exactly why I love this strategy. Like it's amazing. You can see this quick reaction on a higher time frame. And because it's a strong reaction based off of the higher time frame, you can take advantage of that. You can drop to the lower time frame and you can get into a position as soon as possible. Okay. So if we were to drop down to the lower time frame, we would see a break of structure. We could probably see an entry down here, but we'll definitely go over the lower time frame entries in the next video. But for now, this is what I want you guys to see. Okay, so the fact that we explained that we saw liquidity being taken out on the 4 hour, and now we see this happening right here in the 1 hour. Okay, so this happening on the 1 hour, like I said, we can pretty much assume that price will continue bullish, right? Because at this point, price did come down pretty hard, but what did price do right here? Obviously, we can drop down to the lower time frame to see this, but we can clearly see this on the 1 hour as well. So what did price do here too? And we're just going to keep seeing the same thing over and over again. What did price do? Price cleared liquidity, right? And when we're looking at this, look at this too. Okay, so price cleared liquidity. And what do we have here? We have our high of our trading range, and we have the low of the trading range. Okay, high of our trading range, low of our trading range, okay? Why is it our high? Because we broke structure here. Why is it our low? Because we cleared liquidity right here. And we also cleared liquidity on a higher time frame, meaning that this is a strong low. We cleared liquidity on a higher time frame and we broke structure. So when we clear liquidity and we break structure, that is a strong low, okay? More than likely that it will hold, especially on the higher time frame. So we can trust this low, okay? The reason why price came back down here is because if we are in fact bullish, price wanted to come back down, take out internal liquidity. Remember, we talked about that after a trading range is formed. What forms within a trading range? All this liquidity inside of it, right? We have all these swing lows on the lower time frame, built up liquidity, right? And then obviously on the lower time frame, you look for a POI somewhere down here. Price had tapped it right here. And then what had happened? We broke structure again. You could have probably gotten another entry right here on the lower time frames. We broke structure right here. We did it again, right? And what is price going to target from here on out, right? Because we're kind of stuck in this trading range right now. This is our high, this is our low. We're kind of consolidating in between, right? And we see the same thing happen. Before we continue bullish, what happened here? Price took out liquidity. We see these, whoops. We see this built up liquidity right here. What happens? Entry will just be right below it, right here. Entry just below liquidity. And what happened here? Reaction. And what's going to happen? We're going to break highs, right? So this is what I want you guys to keep in mind. You want to be self-aware of this. You want to understand it's all liquidity. I promise you, it's all liquidity. It just goes back and forth. Do you see how we went back and forth right now multiple times? Right here. We hit a 4-hour POI, clear liquidity. We had a reaction. We pushed up. We broke structure, right? Telling us that it has potential to go bullish, right? The reason why price came back down here is what to collect? Internal liquidity. It's hunting for sell stops, okay? And then we found our entry right here. Price started pushing back up. What happened here? We had another reaction. This was another clear liquidity right here. Why did price do this? Because we're hunting buy stops, okay? It wanted to take out all the buy stops. And what happened again? Price came back down, didn't break this low, but what did we do? We're creating liquidity right now. So it's in a consolidation arranging phase. What happened? We came back up. We went ahead and broke this high. And this is a perfect example of a fail swing right here, okay? We see how this high right here never broke this low, right? So this high never broke this low, meaning that it's a failed swing. And remember what I was telling you guys, a failed swing will get taken out. Always, a failed swing will always get taken out. It will be used as liquidity, okay? So what did price do? It came back up because this high did not break this low, okay? So it's a failed swing. We use it as liquidity. What happened? Price tapped above it, used it as our liquidity, tapped it, and then we're going in the opposite direction, okay? So we targeted buy stops. What happens after we target buy stops? Now it's sell stops. So price is coming back down. This area of consolidation and arranging phase where we created liquidity, it's going to take that out next, right? We want to target back and forth. So price came back down, target this liquidity. Where's our entry? Just below that. Our entry is literally going to be right here, just below that. Our POI is right here. What happened? Price tapped and it's going to break structure now, okay? So let's go ahead and play it. More than likely going to break structure. Right there. And what kind of break of structure was this? A strong break of structure. And this is what I also want you to pay attention to now. We broke structure. What happens now? Okay, so we're going to zoom out. What is this right here? What is this? It's a high, right? Another high. So we go here. What happened here? We cleared liquidity. We cleared liquidity right here. We had a break of structure. Okay, and we have a POI. Right here, our POI. Okay. And I like to, I'm not a fan of like the rectangle. I used to be. I used to love marking up rectangles like this, but to be honest, nowadays I really just use this array and I just like to use lines with it. It's cleaner to me using lines. So whatever works best for you, but for the sake of this, let's draw a rectangle because everybody has different entries and ways of perceiving a POI. So if this just is better for you because it's a bigger area, then it's fine. Okay. Same thing right here. What happened? We cleared liquidity here. We created a high. We also broke structure here and price came back down, right? So after all of this that's happening now, we already had took sell stops. What are we targeting now? It targeted all this liquidity down here, right? All of this down here. And this would be considered liquidity as well, right? Every swing high has liquidity. And because this was such a strong push to the upside, pay attention to how strong the push is when volume happens. Okay, so when volume like this happens, this is where you would have to use your trade management skills and your judgment. This is where this would define you as a trader and how you're able to be an individual trader and create your own style is you want to pay attention to price action here, okay? Because if I had saw this in live market happening, there, I know I said that price would be just above liquidity. So you're probably thinking, okay, all of this right here was, created liquidity, right? And, we're seeing this, maybe someone was looking at this POI, right? They're thinking like, okay, maybe we'll get a reaction from this POI right here, right? But we also have to remember if price is pushing this hard and it's approaching this POI, it's more than likely going to get ran through. Okay, so that's something that we need to keep in mind too. How heavy and strong price is actually pushing. Because if I had saw this in live market, there's no way that you would get a good reaction from this. I mean, yeah, you might get like 5 pips, but it's definitely not worth it as far as risk reward. So just stay patient, and when you see it pushing, normally it's going to be pushing up into something higher. So this is just more liquidity being fed to something above that, which is why, you want to target a POI specifically somewhere up here. But, again, as we're looking at this, we do see, like I said, it tapped this POI here. But why did we tap this? Okay, we already hit sell stops. We're going for the buy stops. We just tapped it, right? And so what happens here? What do you think is going to happen here, right? We don't have any built up liquidity down here. So what does price need to do? Price needs to break structure, right? So this is clearing out liquidity. We had a reaction. So you could have dropped down to the lower time frame, and you could have got a sell position right here. Okay. But this would be considered clearing out liquidity right here. And if we break structure in the opposite direction, I'll just drop down to lower time frame. Because we're going to get more into lower time frames on the next video. That's why I don't want to get too much into it right now, but I do want you guys to just see how it works in the higher time frame and show you guys that price really is fractal, because everything I'm doing here in the higher time frame, it's going to align with the lower time frame. I'm looking for literally the exact same things on a lower time frame scale. Okay. So what had happened here, right? We already pretty much broke structure right here, even on the 15-minute. So I don't know if you see it or not, but we broke structure here. And, and it can be minor structure, okay? I would consider a 15-minute break probably once price breaks this structure. So this was like a minor break in structure. But if we did go down to the 5-minute, it would definitely have been a major 5-minute structure break, and I would have probably taken this. But we see what's happening here, right? So then price is going to start to form a new 1-hour trading range. So we'll go back to the 1 hour. And then you see how price is coming down, right? So this is where you would have your trading range again, right? This would be your new trading range. It would be from this low to this high. Okay. And then the same thing happens over and over again. So, this is happening on the 4-hour time frame scale. And you see how many moves we could have caught within this, like so many moves we could have caught. Once price tapped this 4-hour POI, we could have caught a nice scalp move right here. We could have caught it to this side. Well, not the whole move, okay? We could have just caught it halfway. We could have understood that there was a break of structure in the 1 hour. Once we saw that break of structure in the 1 hour here, we could have capitalized on that. Took some sells here, right? And then when price came back up, we could have took buys to this area. Look, what happened again? It's so repetitive. It's so funny. What happened again? Right here. Liquidity right here. And then what did happen? POI, literally right here on a lower time frame. Price reacted to this, came back down. That's why price pushed back down here. It hit this POI. That's why price pushed back down here. And what happened? We just wanted to collect internal liquidity right here. What happened again? Came back up here and we went through this whole thing again. And we're pushing back up. And the same thing happens over and over again. We're going to have to find a POI somewhere within this. And you see too, okay, this is one thing I want to show you guys as well. So I would not advise you guys to, okay, let's go back here. So, okay, yes, price started creating a trading range right here, right? So this is where a lot of people fail as well. And a lot of SMC traders fail as well. Is because, okay, they're given a trading range just like this, right? Hold on, I'm gonna erase all this, kind of getting irritating. Actually, I just want to erase the drawings. Sorry, guys, excuse me. I have to just erase this shit. Okay, okay, let's keep it clean, okay? So, yeah, so like I was saying, this is the problem where people get fucked up too, because it's like this is where people try to predict the market. Okay, and you don't want to do this. So obviously we have a new trading range, right? Why? Because price had just cleared out liquidity down here. We hit a POI and we had broken structure with heavy volume, and we just tapped into a higher, into another 1 hour POI here. We had a reaction, a nice reaction, and we know that we had a reaction because we've already broken structure on the 15-minute lower time frames. Okay. And so when we see price coming down like this, a lot of times people will try to, predict where, price is going to have a reaction at, right? So you have your break and retest traders marking up this area. You see a break right here. So they're like, okay, it's going to come down here and retest it, right? They're going to come down here and retest. You have traders looking at this area. And then you got traders looking at this area. They're like, oh, this is a POI all the way down here, right? And you got some people looking at this area. Oh, this is the imbalance. Whatever the fuck it is. Or people like, oh, this is the whole supply. This is the whole supply zone right here, right? Because if we go to the, oh crap. Okay. If we go to the, if we go to the line chart, look, we have a whole supply and demand area too, right? So, okay, those traders are going to mark up all of this, right? We have all these 3 areas, right? But the thing with this is like you're trying to predict where price is going to be. But the thing is, when we're looking at this in the live market, we're looking at it right now. How do you know that price is going to hit any of those areas without liquidity? That's why price action is so important, because you need to understand where the liquidity is, where you see liquidity, and where it's reacting. That's how you're going to know where your entry is. Like I said, entry is always going to be just below liquidity and just above liquidity. So how can we know and predict really that any of these areas will have a reaction to them? Because there's no liquidity being created at all. Like there's nothing that's happening here. Price is literally just falling. Okay. So the only things that we can do as traders is obviously, like I said, once we do have a trading range here, you can take your premium and discount tool, okay, the gone box. We can measure this and we can say, hey, okay, this is at least halfway of the trading range, right? Which is good. Okay, so now what you need to know is if we are looking for buys within this, it already eliminated the fact that we're looking for any buys up here. Our buys are definitely going to be below this. Well, sometimes price can react just at the equilibrium. So we can find some buys just here, or we can, obviously find buys below that. So definitely this eliminates it so much, and it kind of refines it down to, okay, we're just going to be looking at this area. But even with the fact that we already have our discount premium prices, like we still don't know what area it's going to hit. So this is where price action comes into play. Okay, so let's watch what happens, right? Oh, shit. Okay, sorry, guys. Okay. Whoopsie. Okay. Okay, sorry about that, guys. I completely hit the wrong button. Okay, so let's watch. Let's watch. Okay, this is what happened. Okay, so we see that price. And this is why I say it's so important. It's so important. I hope you guys are getting this right now, because this is literally fractal. And this strategy is really going to test your patience. It's really going to test your self-awareness as a trader and just being on the chart in general, because what happened here, I already see it. Okay, we had marked up the equilibrium of the trading range, right? We see that price had tapped it just perfectly. We had a nice reaction here, okay? But what happened? We can't trust this reaction to hold, because why can't we trust it? Okay. Price came back up, but the reason why price came back up is, okay, what happened? We wanted to tap, we wanted to get rid of any buy stops, right? So price is doing that same thing, and you could have caught this move on the lower time frame. Price is coming back up, obviously, to just hit another POI area. Bam, we hit this area, right? But this is what I want you guys to understand too. This can be taken as liquidity, okay? The reason why this can be taken as liquidity is because what happened here? We had a reaction at the equilibrium. Price broke up. Yeah, it may have broken structure here on the lower time frame, and you definitely could have capitalized on that, but we're not into lower time frames right now. We're just paying attention to the higher time frame. But what we're currently seeing is when price tapped this POI right here within this 1 hour trading range, this low did not create a high. Like this low did not create a strong high. Okay, this high did not break the previous 1 hour high of the trading range. So what does that mean? It means this low is a failed swing low. And what do we know about failed swing lows? They are going to be taken and used as liquidity. They're going to be taken out again because simply they're not strong. Okay, if they're not strong, they're going to get taken out. And what happened here? After price had tapped this POI, we had a strong push to the downside. Okay, and what happened? We had a little, small little reaction right here as well. But what happened here again? This just gave us a stronger confirmation to look for something lower, because what happened is that price tapped that, and look what we just created. We created equal lows here, right? From this failed swing low. We came back up, had another reaction, and we ran through that because this is liquidity right here. Okay. And so when we're looking at this, it's like, okay, liquidity, and let's go to the higher time frame. Okay, and this is our new low. Okay. So price should not break past this area anyways, right? This low should hold. But if we're looking on the higher time frame, honestly, I would have probably had marked up this area right here as just an area of POI. Okay, so what I always do in the higher time frame too is I mark up areas like this specifically, just letting me know that I want to look at these areas for reaction. Okay, it doesn't mean I'm going to enter here. It does not mean any type of refinement. This is me simply just marking higher time frames at areas where I'm expecting to see a potential reaction from. Okay, so if I was, just charting up on a regular daily basis, and I kind of saw this on the 4 hour, I would definitely mark this, because, this would definitely be in like a nice POI for me to look at, especially if it had already created this as well. So once I already see that there was liquidity created in that trading range, then I'll go ahead and look for a specific POI beneath that. Okay, so remember what happens. Liquidity, entry would just be right below that. Okay, it would be the closest POI. Okay, but remember, I also said you want to look at how price is breaking structure. So because this happened and it had a huge push to the downside, obviously, like we're not going to enter right here at this like imbalance, whatever you want to call it. We're not going to enter right here because price was just pushing super hard, right? We don't want to enter there. So obviously we want to enter at something a little below that. Okay, and you can kind of see that on the 4 hour. I marked this up. Yeah, you might have, experienced some drawdown depending on where your entry was. And like I said, we'll refine on the lower time frame later, but this is just showing you how the market moves in the higher time frame. This is how I'm able to find those POIs and take advantage on the higher time frame. This is really what it looks like right here. So just please keep that in mind. And look, we had a nice reaction. So I'm going to go ahead and just play it out. And then bam, we continued breaking highs. Like, beautiful. It ended up breaking all this because now that we're looking at a 4-hour view, what is all this to the left here? Liquidity, external liquidity, right? Because this was internal liquidity right here, and it got taken out. And what happens after we take out internal liquidity? We target external liquidity. The internal liquidity is going to be sell stops. What is external? Buy stops if we're in a bullish market, and vice versa if we were in a bearish market, okay? But you see this? You see how price is literally back and forth between liquidity. And that's all you need to know. Like, you don't need to know all this fancy shit. Like, people be charging shit for like learning how to get the most sniper entries from order blocks and all this other crap. And it's like, no, dude, like all you need to know is liquidity. You need to learn how to read liquidity, understand it, be self-aware with it. Understand price action. Price action is also important too. Understanding how to manage your trade live and understanding structure. That's all you need to know. Because look at this. We had so many plays within this higher time frame structure just alone. Like you see how it was hitting back and forth, POIs, clearing out liquidity, breaking structure. It's just back and forth. And all you need to do is just refine these entries on the lower time frame. So I hope this video made sense on the higher time frame. The next video will definitely get back into this same structure and how literally you're gonna see it's the exact same thing that we were looking here on the 1 hour and 4 hour. It'll be the exact same thing on the lower time frames. We're going to be looking for the exact same thing. It's fractal. Everything's fractal. Doesn't matter what time frame you're on, it's going to work. So the next video is going to be looking and defining for our entries, being able to get that better RR for all your trades. But like I said, if you're not really a scalper, if you're looking to just add scalping into your arsenal, this works perfectly for anybody who's intraday, day, or swing. But I personally believe capitalizing off of scalping is a lot better. I mean, the fact that you're so precise on the higher time frames like this, that's why I'm able to drop aggressive lot sizes with with less risk, is because of this right here. It's so precise. And you see how the higher time frames give you those precise entries. So like I said, I hope this made sense for you guys. I know it can seem very confusing at first just because like there's so much back and forth, right? And it's just a lot of movement within time frames, but just study it and you'll begin to see it, okay? You'll begin to see it. So if you guys need any help or have any questions, just shoot me a message and let me know. But this is the end of the higher time frame video, and we'll get into entries next.